Hello, everyone. Mo Zulfikar here with another episode of the 5 Minute Show, where I try to break down an investing or economic concept within 5 minutes. Today, I want to talk about Canadian banks, but before I say anything, I want to let you know that I'm not predicting some sort of a financial crisis or banking crisis in Canada. Canadian banks are well capitalized, they're profitable and they're stable. This is not 2008 or 2009, and there is no regional banking crisis happening. This is not like 2023. But after a strong run and, improving sentiment over the past few years, it may be time to be a little bit cautious here. And not because something is breaking, but because maybe the risk to reward situation could be shifting a little bit. And in 2026, we may see that. Once again, Canadian banks are considered some of the safest banks in the world. And why is that? It's because they're extremely conservative, they're heavily regulated, and there are only a handful of them. That means massive market shares, strong pricing powers, and very little competition. They don't have to swing for fences to make a lot of money. And because of this structure, they have treated their shareholders very well, strong dividends, steady growth, and excellent long-term performance. Take a look at the Royal Bank of Canada, for example. As of this recording, the stock is up about 153% over the past 5 years, 727% over the past 20 years, and up close to 2,000% over the past 25 years. That's impressive. Canadian banks, again, have been fantastic long-term investment. But there is one thing you should know. Canadian banks have been great, but they do go through downturns, and these downturns are not very easy to stomach. Again, looking at the Royal Bank stock, over the past, 25 years, there have been multiple moves where the stock price dropped over 20%. Just to name a few, it dropped 38% between 2014 and 2016. It dropped 29% between 2022 and 2023. And we also saw big moves in, during the financial crisis of 2008, 2009, then 2011, 2018, and 2020. We all know what happened then. Look, I am not trying to pick on Royal Bank of Canada. I'm just talking about it because it is the biggest banks and other banks move in the similar direction. What's important to note here is that safety does not mean immunity. Now, why am I talking about this? It's because markets are forward-looking. Markets care about what happens next rather than what has already happened. There's one measure I want you to look at. It's called the provision for credit losses, or in simple terms, just bad debt or bad loans. So far, Canadian banks are reporting robust financial results over the past few years. There were widespread fears that Canadian consumers and businesses would struggle as Bank of Canada raises interest rates. Those fears never materialized into anything major. In the midst of pandemic, banks did increase their provision for credit losses, but then sharply lowered them in 2021. But since 2022, these provisions for credit losses have been increasing. Again, I can't stress this enough. Market is forward-looking. Don't forget this basic point. Now, let's look a little bit broader here. The years 2025 and 2026 are expected to be critical for Canada, as a large number of mortgages are up for renewal, while interest rates have remained elevated. That means higher payments. If a household's mortgage increases by just $100 a month, that's $1,200 less per year spent elsewhere or saved. And I know people will say, what about home equity is rising? And that's fine. But make no mistake, feeling rich and having cash in hand are two different things. On top of that, add things like rising grocery costs, higher unemployment, slower hiring, and even Bank of Canada not expecting anything great out of Canada for the next couple of years. Now, I have to ask this, wouldn't all of this eventually impact balance sheet at banks and that we see even higher provision for credit losses? Coming back to Royal Bank of Canada. Once again, let me make it very clear, nothing against the bank, just using this as an example. Between 2014 and 2016, when the stock saw a big decline, PCL increased by 33%. In 2022 and 2023, when Royal Bank stock saw another big decline, you had provision for credit losses increasing by 400%. But here's the thing, between 2022 and fiscal 2025, provision for credit losses have been continuously increasing. Putting in simple words, when PCLs or provision for credit losses or bad debt start to increase on banks' balance sheet, you start to see the stock price underperform. The last 2 years, the market has relatively ignored this fact that PCLs were increasing. Could the PCLs increase in 2026? Yes, it's possible. And if history is any indicator, we have seen as PCL increase, Canadian banks tend to underperform. In 2026, we could see a rough patch for Canadian bank stocks. Just so we are very clear, once again, this is not a recommendation to sell or bet against Canadian banks. Again, go back to the big picture. If Canadian banks go through a rough patch, which, again, in my opinion, isn't impossible in 2026, it could actually turn out to be a blessing in disguise for investors looking to either initiate or add to their position. One thing is very clear, over long term, Canadian banks have created massive wealth. They remain conservative, they control a huge portion of the market, and there is very little threat from new entrants, or at least for now. Yes, I truly understand that, things like return on equity, deposits, loan growth, and other factors play a role here, but there's some truth that as provision for credit losses increase, stock prices suffer a bit. And I can't stress this enough. The past 2 years, market has relatively ignored the rising provision for credit losses. In the end, I will just say this. 2026 is shaping up to be an interesting year for Canadian banks. 2025 has been, a great year for those who own the stock. But I also wonder, could 2026 be the year, where people who missed out on the rally get an opportunity to enter? I am watching these stocks very closely. If you like what you saw, check out zulfikarresearch.com. While you're there, make sure to check out the Trade Ideas page. I am working on something exciting and I will be announcing it soon. I will be back with another 5-minute show episode, so stay tuned. In the meantime, like this video and subscribe to the channel. Goodbye for now.